Welcome back. We start off with the United States, as the Labor Department has reported that the number of Americans filing new unemployment claims rose more than expected last week, increasing by 14,000 to a seasonally adjusted 217,000 for the week ending January 11. Despite the uptick, levels remain indicative of a robust labor market. Economists have projected 210,000 claims, and the data aligns with recent signs of resilience in the labor market. December saw non-farm payrolls rise by 256,000 jobs, while the unemployment rate dipped to 4.1%. The Commerce Department has reported that U.S. retail sales showed solid growth in December, rising by 0.4% after an upwardly revised 0.8% increase in November. This report, combined with strong December job gains and a decrease in the unemployment rate to 4.1%, points to continued demand in the economy. Although inflation eased, overall consumer prices rose by the most in 9 months. Core retail sales, excluding volatile categories like automobiles and gasoline, surged by 0.7%, suggesting strong consumer spending. According to the Labor Department's Bureau of Labor Statistics, U.S. import prices rose just 0.1% in December, marking a third straight month of minimal increases. The rise, driven by higher fuel and food costs, was offset by weakness elsewhere. Over the past year, import prices rose 2.2%. Despite higher energy and food prices, inflationary pressures remain subdued. The Federal Reserve is expected to hold rates steady this month, with a rate cut anticipated in June. Core import prices, excluding food and fuel, rose 1.9% over the year. On another note, U.S. Treasury Secretary Janet Yellen has criticized President-elect Donald Trump's proposal to establish a new agency, the External Revenue Service, for tariff collection, calling it duplicative and unlikely to save taxpayer money. Speaking on The Late Show with Stephen Colbert, Yellen highlighted that the plan would overlap with existing duties performed by U.S. Customs and Border Protection, undermining Trump's efficiency goals. Trump also announced plans for sweeping tariffs, including a 10% tariff on global imports and up to 60% on Chinese goods. Yellen warned such measures could raise costs for U.S. consumers. Reuters has reported that Canada could retaliate with countermeasures targeting up to 150 billion Canadian dollars in U.S. imports if President-elect Donald Trump enforces a 25% tariff on Canadian goods and services. Prime Minister Justin Trudeau and provincial premiers discussed potential responses, including targeting goods like Florida orange juice. Trudeau emphasized a forceful and robust reaction, though Alberta opposed limiting oil exports, which could spike U.S. gas prices. While Trump justifies the tariffs as addressing border security and fentanyl smuggling, such measures may breach trade agreements and severely impact Canada, which sends 75% of exports to the U.S. Canadian Prime Minister Justin Trudeau has stated that Canada is considering all options in response to Donald Trump's proposed 25% tariffs on Canadian imports. Speaking after a meeting with provincial premiers, Trudeau emphasized the need for a united strategy to address the potential trade disruption, which could significantly impact Canada's economy.
We need to respond in measured but robust ways to the American actions, whatever they are. We can't know definitively what our response will be, or can't announce what our response will be until we know definitively what the Americans are going to decide to do. We continue to hope that they will realize that tariffs on goods coming into the United States from Canada is just an extra tax on consumers in the United States. It's going to raise prices for consumers in the United States. That's not something that we want. That's not something that I think American citizens and consumers want. So we are united in wanting to move forward to make sure that these tariffs don't actually happen.